Donald Trump recently announced that he would be implementing a 90-day pause on tariffs for over 75 countries, which has added trillions of dollars back to the stock market and has sent Bitcoin flying over the past 24 hours. What's up, guys? It's CryptoDave here with the top tier, and in this video, I want to break down my thoughts on Bitcoin's recent price action, whether or not we've set in a bottom, and whether or not we should expect a wave of bullish price action over the next month or so. There's a lot to talk about in this video, but if you enjoy these market updates, definitely subscribe to the channel, tick the little bell, you'll get notified every single time that we post. Without any further ado though, guys, let's go ahead and jump into the video. So starting out with Trump's announcement from the other day, I'm not going to read the entire thing, but essentially he is doubling down on his efforts to battle China's trade, and he is also easing up on over 75 countries, because according to him, over 75 countries have reached out to some US representative with an attempt to essentially stop the tariffs or reach some sort of trade agreement or strike a deal of some kind. And so it's very important just to take all of this at face value. We don't know how true it is as far as how many countries are actually reaching out to the United States and what they're actually saying. But the message was obviously framed in a very positive way, that countries are taking Donald Trump's tariffs seriously. They are wanting to negotiate fair trade. All of these things in theory are very good things, and it's what you would want to see come out of a slew of tariffs like this. So very understandable that the market reacted so positively. I think it's just very important to understand that a lot still has to happen. And if we just consider the past month or so, so much of this tariff stuff has changed back and forth. And we really just don't have the clarity, number one, on what these trade agreements are going to end up working out to be, and two, how that is actually going to impact the price of goods, services, materials, and other things like that. So just take it for face value. We don't exactly know what all is going to come out of this. Interesting stuff though, nonetheless. We also see a lot of confidence returning to traditional equity markets, specifically because the unemployment rate, while it has ticked up a little bit over the past year or so, it really hasn't broken, and it remains at a healthy and competitive rate. So if this trade war, if all of these tariffs don't actually result in major job loss and price instability and all of these things, then where is the recession going to be? Well, that's the exact thought, and I think that's why a lot of risk is returning back to the market, and we need to make sure that we are objective and rational about what price action is telling us and how we need to position ourselves. It's also important to note that economists are now predicting about a 25% chance that we will get a rate cut during the FOMC meeting on May 7th, whereas just a month ago it was about a 50-50 chance. So while this might be good for the United States economy, as far as Donald Trump's announcement on tariffs, it may not be good as far as the overall rate cutting cycle and just that global liquidity factor for crypto. So some battling factors at odds here. I don't think it's too much of a big deal. We will have FOMC coming up, so just keep an eye on that. So with that in mind, let's move it over to the S&P 500. We are on the daily time frame right now, and in one of our most recent videos, we talked about what a true bear market could look like for stocks and kind of how you can take advantage and position yourself during times of a recession. And I don't think too much has changed here despite Trump's announcement. You know, we've still broken a lot of these both short and longer term moving averages on the daily time frame. We are seeing those shorter term moving averages cross below the longer term moving averages. This is generally seen as a bearish crossover. It shows that the strength of the trend has essentially dwindled down. And so as opposed to coming down and treating these moving averages as levels of support, where we would expect buyers to come in and resume the uptrend and outpace sellers, we're no longer seeing that. For one thing, we were not able to hold this 200 daily EMA, which is usually a very important EMA here on the daily time frame as well as the weekly time frame. Trading back into some of these moving averages, we saw a clear rejection, and that is when we got our breakdown. So we do have a nice bullish engulfing candlestick coming off of yesterday's news, but I just want to make note that we haven't really come back up to this 5,500 point level on the S&P 500. I would at least want to see us reclaim this level above anything else, and then of course trading back into this moving average cloud, that would be another sort of area or range that we would want to reclaim. And so far we have yet to do this. As a matter of fact, we have opened this daily candle here well below the close of yesterday's candle. So it just looks like there's not a whole lot of bullish follow through here. It looks like a dead cat bounce off of some potentially bullish news, but we do have to remember the announcement that Trump made was a little vague and it's not really fact checked. So there's a lot that could still come out of all of that. I just don't think that the posturing here on the S&P 500 is very strong. So definitely check out our most recent video on what a recession and a stock bear market truly looks like. I don't think that the strength has really returned for stocks just yet. Moving along to Bitcoin, I want to take a look at Bitcoin over the S&P 500. This is a custom formula that is essentially going to show you how Bitcoin is performing compared to a traditional asset class like stocks. Interestingly enough, we have found support here right around this 14-point level, a similar area of resistance as that of summer of 2024. We've set in some nice higher lows ever since we did this back in February. So far, Bitcoin has held up very well compared to stocks, especially throughout the entire kind of crash that we had last week. Bitcoin well outperformed stocks. We've seen it kind of taper off a bit ever since the Trump announcement, especially. But here just today, we can see holding very well above this 21 and this 50 daily moving average on this custom index. So we'll want to see how this looks, but very clear that Bitcoin is capable of this kind of flight to safety trade. Whenever things are not looking great for stocks and for macro economies. I can't say the same thing for altcoins. We do have a recent video discussing some of my thoughts there, so definitely check it out after this video is done. But I quickly want to look at Bitcoin's actual price on the daily time frame. We do have a lot to talk about. So the first thing I'll make note of is that we've front run the $70,000 to $73,000 range for Bitcoin. This was a previous range high from the summer and spring of 2024. Going through to the election day. And we front run these highs on each one of our lows over the past couple of months. We've done so sticking in some nice bullish divergence. And I think that this is actually a really good thing because a lot of people will sit on the sideline. They will wait for these very big, obvious levels to take their long trade or to buy more Bitcoin or to jump back into the market. A lot of times when you get that level front run, especially when it's front run multiple times, you pull people off of the sidelines and you pull that capital back into the trade. This is how the FOMO factor builds, because once price breaks out and you get a new wave of bullish price action, anybody who had not entered the trade, anyone who was still waiting for these entries is going to want to enter the trade because they don't want to miss out on any of the potential profits. So that's a very important psychological factor to consider. But we've set in some very nice bullish divergence here. We got some higher lows on the RSI. We've got some lower lows in terms of candle body closes on the daily time frame. Daily bullish divergence is one of my favorite signals. It is a very strong, very high probability setup. And I think that, with the stock market crash, or at least the initial stock market crash behind us, and overall just how well Bitcoin has held up throughout all of this tariff stuff, I think we could see a nice wave of bullish price action to follow, but we do have some local resistance to break out of first. We've got this downward sloping trend line here. Of course, your first two lower highs are going to set the trajectory. The third lower high is going to actually set the trend line and establish the trend line. So we've yet to see a breakout. Interestingly enough, our daily candle has taken us right back to this trend line. It's taken us right back to a cluster of these daily moving averages. So there's just quite a lot of local resistance here. Once again, I don't think that this is a bad thing. I think you might get a concentration of shorts that might get squeezed here. Overall, we need to see a breakout. We need to see a nice bit of bullish follow through after sticking in this low. If that's the case, I really do think that Bitcoin has the room to run for a couple of weeks, truthfully. And I would be eyeing this 0.618 Fibonacci extension target from our top to our bottom of this move. It's kind of sitting around this $96,000 level. It's in line with the range high from the day that Donald Trump announced the Bitcoin Strategic Reserve and our previous range lows from the election and inauguration period. So a lot of confluence, a lot of different levels. And for this reason, I do not think that Bitcoin is ready for this extensive, massive breakout to all-time highs just yet. I think if anything, this is a very similar period of time to the late stages of this consolidation here, where we did get some very nice relief rallies. We got some pretty extensive waves of bullish price action all throughout this consolidation. Ultimately, though, the bullish follow through was simply not there, and we continued to range. So we just need to be careful of that, as we move through this next month or so, and we do get some potentially bullish price action. I don't think that we are quite ready to revisit those expansive highs, and I'm perfectly willing to be wrong about that. Believe me, I hold a lot of Bitcoin. I'm a believer in Bitcoin. I've been here for a long time. So anytime the market pumps is a great thing, but we just have to stay rational and level-headed about where the market is. I think that we are still well within a consolidation, and I will change my stance when I feel like I have a good reason to do so. But guys, there's a lot going on in the world of financial markets right now. The tariffs, the trade war, economics, all of these buzzwords are taking over markets. And it's just great to kind of zoom out, get a fresh perspective, and stay objective when it comes to markets. That's going to be the easiest way to make money in this space. And guys, if you want to learn about my personal positioning, how I plan to take advantage of the opportunities in this space, definitely join the Discord down in the description below. You'll get access to myself as well as over 20 trading analysts between stocks, crypto, and Forex, all there to help better your trading game as you learn. And guys, until the next video, I will catch you in the Discord. Peace.